God, it's Friday. Good morning, everyone. Good to be back. It's 55 minutes of current and relevant business conversation. Yes, I'll tell you a bit about where I was. Of course, you've seen that. The Africa CEO Forum in Abidjan, that's over now. But I do have gist for you from there. That will be part of the program for today. I'm in John McQuarrie. Let's do business, starting from the global space where oil prices extended declines on Friday under increased supply pressure from an OPEC Plus output hike and the prospect of an Iranian nuclear deal, yet they're heading for a second consecutive weekly gain because of easing between the U.S. and China trade tensions. Now, for this morning, we see a gain of 0.2% on Brent to $64.54 a barrel, still around the range I left, I see. And then for WTI, it's the opposite, it's down 0.02%, $61.60 a barrel. Both contracts fell more than 2% in the previous session, following a sell-off on the prospect of an Iranian nuclear deal. U.S. President Donald Trump has said that the United States was nearing a nuclear deal with Iran. Tehran sort of agreeing its terms, that's what he says. However, a source familiar with the talk said that there were still issues to be resolved. Now, despite the potential supply pressure, both Brent and WTI gained 0.6% so far this week. Sentiment got a boost after the U.S. and China, the world's two biggest oil consumers and economies, agreed to a 90-day pause on their trade war, during which both sides would sharply lower trade duties. The hefty reciprocal Sino-U.S. tariffs had raised fears of a sharp blow to global growth as well as oil demand and global economy. The Nigerian Upstream Petroleum Regulatory Commission, NUPRC, has reiterated its plan to raise the number of active oil rigs in the country's petroleum sector from the current 36 to 50 by the end of this year. Well, this was made known by the Chief Executive of the NUPRC, Mr. Gbenga Komolafe, at the just concluded 2025 Africa Energy Summit, which was in the UK, London. According to him, the move would mark an increase of about 38.89% when put into comparison currently. Mr. Komolafe notes that from 8 oil rigs in 2021, President Bola Tinubu's recent reforms have significantly removed the bottlenecks and enhanced investment in the country's oil sector. The NUPRC chief also mentioned that Nigeria is set to tap into the projected $600 billion annual upstream investment that's required to grow Africa's oil sector, which is estimated to hit about $3 trillion by 2030. Away from the oil sector now, the world's biggest off-grid solar firm, Sun King, has secured an $80 million financing with Stanbic IBTC and the International Finance Corporation, and that's to speed up Nigeria's solar electrification access. A statement from the company says that the loan, which is its largest local currency facility for energy access in West Africa till date, is expected to help finance the provision of electricity to as many as 4 million households over the next 4 to 5 years, adding to the 2 million which it has already funded. The company also mentioned that it expects private investment of more than $1 billion to be attracted and electricity access to be extended to 17.5 million people in the country. Sun King, which is a leading off-grid solar provider, designs, distributes, and finances solar systems across over 40 countries. Pitch Day 2025 is what has brought SMEs together, and that's the latest of the efforts to boost and empower businesses, especially the small ones in the country.
Pitch Day 2025 is the climax of a year-round educational support to empower businesses and make them profitable. Hundreds of operators of especially small businesses are here to get tips on how to scale up for sustainability and greater impact. And this goes beyond funding.
Supporting profitable companies is our method of creating impact. But our mission is not to make money for ourselves.
What capital tries to do usually is to come in to remove some of those obstacles. So people talk about, oh, let's bring in venture capital and private equity because there is no capital. What Cascado found out was that capital alone wasn't going to do it. It's important that you actually equip the entrepreneurs to succeed.
No farmer. All right.
Farmers and other players in the agriculture value chain have been given priority, seeing that Nigeria is still seeking to achieve food security.
More than half of the inputs sold in rural markets today are fake, cutting yields by more than 40%. Our direct access to inputs from manufacturers fixes that and has already raised buying farmers' income by 70%. Now, farmers in Nigeria spend a lot on agricultural inputs. $3 billion annually. In the next 5 years, we will capture $30 million of this market and become the largest single point of access to all inputs.
At least 39 million micro, small and medium enterprises operated in Nigeria as of December 2020, as against 41.5 million that were the year before. Reports indicate that SMEs contribute 48% to national GDP and account for 96% of businesses and 84% of employment. Unfortunately, though, research also shows that over 50% of SMEs fail in their first year of operation. This calls for urgent actions such as this to empower entrepreneurs in the ecosystem.
And improving ICT in the country, that's information and communications technology, is the work which NITDA is doing. Recently, well, they did come to Lagos, led by the Director General, and the essence of that was to open up a center at the suburb of the state that's supposed to make available digital inclusion in that area and access to some residents in Lagos.
With priority number 7 specifically focusing on accelerating diversification through creative art, manufacturing, and innovation. So this center represents the President's commitment to digitally inclusive Nigeria, where every citizen, regardless of societal or social status, gender, and affiliation, has access to digital infrastructure and skills. So the President wants to drive that inclusivity by directing us to design, conceptualize, and build this kind of centers in underserved and unserved communities, so that people from remote areas, unserved communities, have access to the latest technology to help them to ignite their potentials to participate actively in the digital economy.
Putting this together, I believe it has given
the major challenges is even getting the communities to own it. Like in this community, the Son community here in Lagos, they are fantastic. We had a woman that donated the land. We have the community leadership, the elders, they are all part of it. Because what we want to build a sustainability model around. We don't want government to build center and every time when there is a small thing, government has to come to fix it. We want the community to take ownership. We want the community to work to the youth in the community, to train our people, and also find a way the center is sustainable. Yes, it's a huge task, but NITDA is an agency, it's a developmental agency. We have a development fund, which is there for us to help develop IT and promote use of IT across the country. So we always keep in touch with them because we give them a benchmark on what we want them to do. Because the standard is if the managers, they are not doing well, we can collect it from them and hand it over to other people that will manage it better. But the sustainability model, if the community own it, that means there is a leadership in the community, there are elders, there are religious leaders that can sit down to make sure things are working the way they are supposed to. But everything is according to the guidelines we give them. Okay, sir. So we want to have this almost everywhere. That's our bigger target. We have it in 3 categories. There are smaller ones we do, where we go to schools, they provide the facility for us to equip it. So far, under this administration, we have done 222 centers. Then these community centers, so far, we have done about 18. Then we have the bigger one, the innovation hubs, which we have done about 3 under this administration within 2 years. So our target is, before we've done more than 1,600 across the country. We want every community, we want every Nigerian to be part of this national prosperity and inclusivity when it comes to digital economy.
And now for our GSTV viewers, I will be leading you to the Federal Capital Territory, Abuja, where the Federal Ministry of Information and National Orientation is holding the 2025 Ministerial Press Briefing Series. It's a continuation of what we've been bringing to you before now. And today, I believe we'll be hearing from the Minister of Arts, Culture and Creative Economy. And then you also want to hear from the Minister of Works, a very interesting one, I believe it will be. But that's for our GSTV viewers, and for our other viewers, we'll be right here on Business Morning. If you're watching on YouTube and you want to continue watching Business Morning, just switch to the next platform on our YouTube platform, and you'll be here on Business Morning. Now, talking about the economy and security, there's an intersection there. That's what LCCI, that's the Lagos Chamber of Commerce and Industry, believes. And that's why they had a crucial meeting with some agencies from the security.
It's the Lagos Chamber of Commerce and Industry Security Meets Business Forum, where the focus is the reality that affects the intersection of security and economic prosperity, with highlights on the challenges faced in charting strategic course towards a safer, more resilient Nigeria.
Security is not merely a law enforcement matter. It is an economic imperative. In Abuja, for example, business revenues declined by 33% between January 2023 and January 24. That was 1 year due to rising insecurity.
The most important agencies empowered to regulate security are here to give assurances to investors and potential ones.
Have impact on the country's economy, where investors, whether local or foreign, have confidence in our efforts to be able to ensure the security and stability of our country.
Our strategic action, our intelligence unit, which include the Force Intelligence Department, the State Criminal Intelligence Department, and other departments, response team work around the clock to monitor criminal trends that may threaten investment security in the country.
The 2025 Global Terrorism Index ranks Nigeria 6th globally, up from 8th place in the preceding 2 years, with a score of 7.658. In 2024 alone, Nigeria recorded 565 terrorism-related deaths, a stark reminder of the ongoing national security crisis and real threats to Nigeria's business climate.
And now let's talk about those numbers you saw yesterday from the National Bureau of Statistics, where inflation rates slightly eased in April. According to that latest report, headline inflation dropped to 23.71%, and that's down from what we had in March, where we talked about an increase. On a year-on-year basis, headline inflation was 9.99% lower than the 33.69%. while on a month-on-month basis, it stood at 1.86 in April, and that's down from 3.90, representing a 2.04%. Core inflation was also top on the list. That's an exclusion of food and energy, stood at 23.38% from 26.89%. Food inflation fell again, down from 40.53, that's year on year, in April last year, due to change in, that was because of the base. But of course, talking about food inflation, we've seen the challenge of security or insecurity creep back into the agriculture sector. States like Benue, and we saw high food inflation coming from Benue. And yet there's a drop in inflation. Let's try to understand the numbers now. We're going to be talking to Dr. Ayodiji Abel, the Managing Director and Chief Business Officer of Optimus by AfriInvest, joins us virtually. Mr. Abel, or Dr. Abel, beg your pardon. Good morning and welcome to the program. Were you surprised? I did see some projections, and it wasn't a drop in inflation just 1 month after we had that uptick.
Okay, thank you very much. And looking at the numbers, there's no surprise. If we look at the, inflation is done year on year. So the first thing we need to note is that there was an increase, but the increase was at a slower pace. So where you compared for last month, which is the March 2025, at about 24.23%, it means that prices averagely increased by that amount. So now coming down to 23.7, price still increased, but at a slower pace. And when you look at the numbers, April 2024 has a very high base. That was when inflation also peaked. And as a result, when you compare it year on year, it's expected that it would drop. So what we are seeing, and it is broad-based, because when you look at food inflation, even on a month-on-month basis, drops significantly, and also core inflation drops significantly. So we're seeing that on a month-on-month basis, there's also a drop. But when you look at the rates of the month-on-month change, it still looks very high. Yes, it's commendable that we're seeing that drop, but when you look at on a month-on-month basis of about 1.86%, when you analyze that, that is still also significant, given that we have just rebased the GDP, the inflation rate. Thank you.
All right, but the worry is actually with the food. So first we saw that with the rebasing, there was less priority or value given to food as an item in our inflation baskets. Now we've seen disruptions in the agriculture space recently, the attacks on farms in Plateau State, in Benue State, the food basket of the nation. But it doesn't seem that's being captured in the food inflation data, or is it too early to expect that to reflect?
No, I think that is also weighted. You spoke about the insecurity. So when you look, for instance, looking at it on a state-by-state level, Benue State recording 56%. And when you look at their slogan, food basket of the nation. So if the food basket of the nation that should be during low food inflation rate is having close to 51%, that just shows so obvious that there's actually a problem. But because of the weightings, prices have moved significantly on the back of rising energy prices, rising exchange rates. So what we're just seeing is a bit of price correction that we're not seeing as much change like as we used to see. So that's what we're currently seeing, not that the impact that we're supposed to see. So you spoke about the food inflation that the month-on-month has dropped significantly. But when you look at it for food, last month-on-month was 2.16%. And for April now is at 2.06. It's still marginal. Still a major problem, because when you annualize this, that means that inflation, food inflation is still will be significantly above almost 24% for the year, which is not good for the populace.
Okay, so with this now, would we say we are in a declining rate when we talk about our inflation trend, or are we in between at this time?
Okay, I would say that it's still early to come into the assumption that we may be seeing a decline because of some of the, currently the inflation rate have been just being rebased. Secondly, and when you look at those numbers, they are just normalizing that even doing your forecast is a bit complex because when you are trying to compare it to previous numbers that was not rebased, comparing. So what I would say is that when you look at the reality, what are the drivers of inflation? We see exchange rate has been a bit stable. Uh, Energy prices have been a bit stable thanks to Dangote refinery bringing down PMS prices. So that in its own, for most of the items, would not increase significantly beyond the current level. However, the insecurity level in the country is still very high, especially in food producing area. Based on numbers, so even if we're not looking at the news that is qualitative, Benue State should be one of the states that should have the least food inflation numbers, but it's having almost 50%. It means that there's actually a problem when you look at the amount of food that comes from Benue State alone. So it's nothing to be exciting about. Yes, it may look like a progress, but the trend cannot be established now, given a lot of the rebasing, recalculation that would also step in.
Does it mean we should expect a hold from MPCs next week?
Yes, so exactly. So it will be too quick for the MPC to make a decision because a trend has not been established. For March, there was an increase. For April, there was a decrease. So they may likely want to see what May numbers are, if it also drops. So that would enable them to see that there's a trend that has been established. But given the stability we are seeing in the FX, yes, a bit of depreciation, but still manageable. And also looking at energy prices that has also been stable. I feel that there's actually no cause for alarm because the CBN also still needs the FX to keep coming in. So reducing interest rate at this time may stabilize the equilibrium that we're enjoying so far.
All right, we'll see what the decision will be. It's next week, Monday and Tuesday. So we'll see what the MPC will do about that and where we go from there. Thank you so much, Dr. Ayode Jebo, Managing Director and Chief Business Officer at Optimus by AfriInvest.
Always my pleasure. Thanks for having me.
Let's take a break now. When we come back, I'll give you a bit of what I was doing in Abidjan during the Africa CEO Forum. Stay with us.
It's not technology that moves.
Welcome back. It's still Business Morning here on Channels Television, where one of the conversations at the 2025 Africa CEO Forum is government on the continent raising revenue through taxes while avoiding what seems to have become normal now, which is the resistance. After the session, well, I had to sit down with the executive director at Zenith Bank, Mr. Henry Oro, and this is what we discussed.
Governments want to increase revenues, and a channel for such increase is usually taxes. When you tax the people, you are reducing their spendable income. So typically, the people don't like taxes. Government like taxes. Government like the revenue to have for public expenditure and all that. But I think that there has to be a balance on how this is implemented. Like I said, there's an optimal level to which you can raise your taxes. Beyond that level, that tax rate becomes a disincentive for production, and people begin to avoid and evade payment and all that. So we need to find what is that optimal level and stick to that level. Okay? Now, the issue around what is that honest and transparent process that we're talking about. You know, it's all about the sincerity of government. Usually, even in our tax laws, it calls for engagement. But we also know that government do not really engage and incorporate the outcome of that engagement into the policies. It's like a tick off the boxes approach. Let's tick off the boxes. But what we are saying here is that before those taxes or reforms are put in place, there has to be early consultation with all the various groups, civil societies, the vulnerable groups, you know, the academia, the students, every one of us. They have to be part of that process. And they should not just be part of that process. Their view should be seen to count. So at the end of the day, there should be feedback how policy shifts have taken place because they've incorporated views from other people. So we need to see a lot more of that. Government needs to be honest. Government needs to be transparent, to engage with the citizenry before such taxes are imposed on them. So honesty is the outcome of the process, not just the process. The outcome of the process should be that their views count. Their views are imputed into that policy paper. And people should know that those views have been incorporated. Once that happens, there will be trust and there will be high compliance, and implementation of those reforms will be better.
So the conversation is about increasing revenue. So I guess we should also remember that increasing revenue for the government shouldn't be just about taxes. We should also look, for instance, at the non-oil exports from the country. And one would ask, as a player in the financial sector, how supportive and intentional are you, talking about your organization, in supporting exports for Nigeria?
Revenue increase don't have to come from taxes only. And sometimes we believe also that the problem we have is not a revenue problem, is how those revenues are appropriated. All right? What is the efficiency of appropriation? What do we use those monies for? What is the governance around those appropriations? That's the problem we have. If we double our taxes, we double our exports, and the governance and sincerity around appropriation of revenue is not taken care of, there's still going to be a problem. So we believe that this discourse will create a change in the way some of these things are done from all stakeholders, both government and the public. The public will be willing to pay their taxes because they've been consulted, and the government will ensure that those tax revenues are properly appropriated in a way that is good for the benefit of the people. I think that is the problem. Yes, beyond tax revenues, we believe that the government can also generate a lot of revenues from exports. And that is why with us at Zenith Bank, we have, for over 15 years, we've been doing this export seminar. We said from zero to hero, where we identify young companies that are into export. We finance them, we mentor them, we support them, and grow them into something very big. So for us at Zenith, and I believe that the banking sector is doing a lot to promote non-exports, non-oil exports. $5 billion 2024 was the revenue from non-oil exports in Nigeria, and Zenith contributed close to 50% of that. Zenith as a bank, one institution among so many. All right, so, and I believe that is also continues, we continue to see more banks come into that space, and we at Zenith Bank will continue to do more to see how we can support non-oil exports. Of course, the oil exports, we are all playing there. Oil is our main revenue stream, and most banks are there supporting drilling and export of crude. But the key thing here that we need to diversify our income stream. We can't all depend on oil. That is why the non-oil export is very key. Nigeria is blessed with so many minerals: copper, aluminum, agricultural products, lithium, iron ore, gold. We have all that in commercial quantity, but we have abandoned that because of oil. So it's time we go back to oil. In a few years' time, if we're able to move non-oil export to the levels of 10, 15, 20 or more $billion, I believe that our country our revenue stream will be diversified and will be better for the country.
The whole theme about the Africa CEO Forum for 2025 has to do with collaboration between the public and the private sector. What strategies do you think can be employed by countries on the continent, especially Nigeria, to increase the benefits of this collaboration?
That collaboration has to be seen kind of public and private sector. That collaboration, the benefit will be more apparent, like I said, when we follow the process of consultation, engagement, and people buy into what government needs to do. And I believe the private sector will be very willing to invest in the public sector. You see, there's a lot of gap in our economy, especially infrastructure, right? And the private sector, they are willing, they are ready. Equity investors are ready to bring in monies into the system. Provide power will require more power. You build roads will require more roads. You build rails, you require more rails. So there are opportunities. It's for government and the private sector to work together in such a way as to begin to provide these things. And one way is to go through concessioning. Government doesn't have to spend the money directly all the time. You can go through concessioning. A lot of that. And yes, it comes back to the issue of governance. If it doesn't work, then we have ourselves to blame. What's governance is the sincerity and the transparency around implementation of those policies. When you concession a product or a scheme to investors that are probably not the best fit for that, then there will be failure. When you do a concessioning and the commercials are such that proper governance has not been built into it, it will fail. Because the concessionaire will have to wonder, how do I make my money? Because most of these things have not been done in a transparent way. So governance is a key thing for us to move forward for that. Whatever we do, after all the talk, we need to have strong governance. We need to have an honest process. Government needs to be very transparent, all right? It has to be inclusive. And the outcomes has to be such that people see that there is benefit for us. When people know that benefit is being created and value is being created, they will work with government. How much value are we creating? How much value is the government creating? All right? So those are the questions we have to ask ourselves.
And that was a bit of what happened on the sidelines of the Africa CEO Forum. There are more interviews and more gist coming from that. But for today, that's all we can give. Now, one of Nigeria's leading financial institutions, Access Holdings PLC, has held its third annual general meeting, celebrating impressive growth figures for 2024. With a total dividend of ₦2.50 per share declared to shareholders, the group hopes to reinforce its diversification and growth strategy across its subsidiaries.
That is something that I take.
It's the beginning of another financial year for Access Holdings PLC. And for the third year running, the group reflects on a strong performance in the year 2024.
Not 1 trillion naira.
This performance was driven by a blend of organic growth and strategic acquisitions, from Access ARM Pensions and Access Insurance Brokers to Hydrogen Payment and Switching Services and Oxygen X Finance Company Limited. The group's subsidiaries continue to reinforce its diversification strategy and long-term vision for sustainable growth.
We have done perhaps just the first generation. That first generation, from a leadership standpoint in an executive sense, comprising myself and my co-visionary Herbert. 10, 20 years. So we have a 10-generation vision and legacy in mind. If we've done the first generation, that means there are 9 more.
The beauty of our consolidation is the fact that if you do the analysis, you see that the international subsidiaries as well as the African subsidiaries are increasing their contributions to our revenues, which also reaffirms the fact that our income is sustainable.
The numbers tell the story. Axis Holdings saw a remarkable rise in key performance indicators. Total assets surged by 55% to 41.4 trillion naira. Gross earnings climbed by 88% from 2.5 trillion naira in 2023 to 4.8 trillion naira. Profit before tax increased from 729 billion naira to 867 billion naira.
Be declared and paid to all shareholders.
And for a major highlight that always excites shareholders, a final dividend per share of 2 naira 5 kobo is approved, bringing the total dividend for 2024 to 2 naira 50 kobo per share. Reflecting on the group's performance and the road ahead, the acting group CEO outlined their strategic focus for the new financial year.
Our focus still remains the same, and it's consistent with our 5-year corporate strategy. And what do we want to do? Our focus still remains on people, planet, and profit.
As the results show, Axis Holdings PLC recorded growth across key balance sheet indicators and continues to maintain a healthy and diversified financial structure, positioning itself for even greater impact in the years ahead.
And still from the corporate, Stanbic IBTC Holdings declared a final dividend of 300 kobo per share for the year ended December 31st, 2024. Shareholders also re-elected 3 independent non-executive directors and approved the appointment of a new one during the company's annual general meeting, which is also in Lagos. The bank explains this was driven by customer-centric solutions, enhanced digital transformation, and responsible investments.
From far and near, they've come. Shareholders of Stanbic IBTC for the 13th annual general meeting. 2024, a challenging year for most Nigerians, was not different for them. Facing off the obstacles in managing liquidity, rising operational costs and regulatory challenges, the management says Stanbic IBTC remains competitive and profitable.
For the 4th consecutive year, our SME and retail banking businesses retained their first positions in the 2024 KPMG Nigeria Banking Industry Customer Experience Survey.
And the facts and the figures show this growth, which reached 75% in 2024, up from 72% in 2023, with cost-to-income ratio down to 37.6% from 47% in 2023. Though the revenue took a hit with a 100% increase in tax charges year on year, Stanbic IBTC's balance sheet remains strong, with customer deposits increased to 3 trillion naira. With keen interest, stakeholders follow through the auditor's report, giving a nod to the performance, but a message to the regulator.
Insurance for deposits and central bank went up by 15 billion in 1 year. This is basically punishing an excellent student for doing very well.
At the end of the day, it's a resounding approval for the board.
We are paying 3 naira, and I said shareholders appreciate you, appreciate the board, but going forward, disclose it more.
Looking ahead, Stanbic IBTC is assuring stakeholders that more should be expected.
Performance of the company, we believe that with improved performance and earnings and dividend declaration, the results should continue to improve.
We assure shareholders that because we do business, the right business in the right way, we are growing a diversified financial services group in a sustainable manner.
Stanbic IBTC promises to remain an integral part of its customers' journeys across all its customer segments, supporting and enhancing their growth by continuously providing value-added solutions.
And they had Stanbic IBTC talking about the impact of technology, ICT, and AI, which is taking over the world. And that's what we're going to discuss next here with the Chief Technical Officer at AfriInvest West Africa. We have Paul Edward right here in the studio. Hi, Paul. Good morning. Welcome to the program.
Yeah, good morning. And how are
So,
you doing today?
good, thank you. So, banks and everybody, they're depending on technology to boost their income and, get more customers and all of that. And it's happening all over the world, not just in Nigeria. But being a chief technical officer now, it means you are exposed, and I know that AfriInvest, you do a lot of research and all of that. How much adoption, apart from the big companies, small businesses and individuals, how much adoption have you seen or noticed?
So I think in the past, in a couple of months, there has been a very big shift in the way we kind of accept AI into what we do at AfriInvest. So we do a lot of research.
No, I mean generally, not in AfriInvest,
Okay.
generally in the Nigerian landscape, economy and all.
Okay, so I think this is no-brainer because everybody is on social media right now, and you're seeing the way a tool can generate probably an article in less than 2 seconds, and everybody is thinking probably, is this the beginning of an end? So, and what is that telling you? People are kind of accepting, and in a part of them is also telling them that, should I be scared? Should I be worried about accepting this thing fully? But people don't actually have a choice because these things actually make your work a bit much faster than what a normal human would do.
Some people have said that a lot of people use AI without knowing it. But does that make people lazy?
No, I think you need to understand whatever it is that your job is, whatever it is, whether you are an accountant, whether you are a business executive, your job is divided into 2 phases. We have the part that you can do repeatedly without you thinking. You can probably even do it when you're sleeping, and you have that part that you have to think through it. You have to think through it to make what we call a judgmental call on it. So, what is that part that you think that AI will take? The part that is those part that is they are repetitive. And do you know why? Because AI is built on what we call patterns. They are built on things that they have seen before to produce what we call an expected outcome. So those things that you have to repeat over and over again, AI is definitely coming to take that out.
But I hear that AI is also working, or they're also working and making AI take a step further into decision making. What I mean by that is, for instance, in the market, the stock market, you can program AI to put some parameters to say if stocks fall at this, then do this, or if there's a projection or forecast of this level of profit, then you can buy. And I think that's where the fear comes in, that perhaps individual mindset and thinking may be required less and less.
So that's the thing. I said, just like I said earlier on, that this thing is built on pattern, what it has seen before. So it takes into consideration what it has seen before to predict probably a future outcome. So, but one thing you need to understand is that that particular model was not in my last stakeholder meeting. So it doesn't really understand that probably our customers are requesting for probably 2 updates twice a week. It doesn't know that probably the particular stock market is targeted towards a specific need. So if you are expecting it to probably make decision for you in that regard, it taps out because it believes that probably this is not in my fine-tuning. So, and that is where the human judgmental call comes in. AI use all these predictive analysis, what it has seen before, to be able to say, okay, I think this thing should be able to behave in this way. Then the human has to come in to say, okay, based on what you have shown me, I think this is not the right one. This is not the right call to make. And this is where human will always supersede artificial intelligence. So I will still end it on this note that people should not be afraid that probably AI will still come to take their job. The human part will continue to evolve.
But it's also, I mean, you use the word evolve there. So it also means that for human beings to remain relevant, you have to up your game. If the repetitive responsibility can be pushed to AI, that means you should be able to provide decisions and actions that are not repetitive and which AI cannot handle. So it now means everybody has to get educated.
So I can't really probably deny that, because for those that have refused to evolve, AI is definitely going to take their place. So if you whatever you're doing and you are not kind of thinking of how do I up my game in this thing I'm doing, AI is definitely going to take your place. But if you are looking at it, how best can I create things that what is the thing that I can't do that AI can now make me do? And what is the other thing that I can now do again to supersede the result that this is giving to me? And I think that is where human will always stand out. But if your work is just based on repetitive tasks, I'm really sorry to say, AI is really coming to take that part of your job.
So with this trend now, what advice would you have for humans who are already in career and those, for instance, coming out of school? I mean, I heard some courses have been outdated, obviously. I mean, you're studying business administration and things like that. What do you come out to do? So what advice would you give to individuals, either who already have a career or those who are coming out, you know, to build a career?
So I think the first question you should ask yourself is this: what is that thing that you can do that the AI can make you do better? So, and the second advice is that how best can you evolve out of what you are currently doing? So this thing should actually be, it should be an aid for me to be able to up my game, not me completely depending on it. The moment you start depending on it for your decision making, for everything you're doing, that is a sign that in a very short while, you'll be out of business. So the question you should keep asking yourself, if they are releasing a model that has the capacity to do this, how can I up my game? How can this thing help me to be able to produce a very much better result in a very short period of time?
So with this now, what areas or sectors do you see as most lucrative to build career at this time?
Now, that question is a bit tricky, because now we would have said probably that the technical arm, of course, but no, the way this thing is being trained right now, it has the capacity to touch almost all areas. I think right now we are already talking about probably robotics coming to interview humans, just like you're talking to me.
Yeah, one of a TV station in Nigeria said they're cloning anchors.
Exactly. So it's actually touching all arms. So what I would say right now is almost every area, as long as you are not going to till the ground, and as long as, even if you're still tilling the ground, you still need to rely it for some information, probably research on some things that you need to probably help you make better produce. So I think this thing has touched almost all areas, and there is no particular areas that is left alone. So the best thing is, whatever you're doing, look at it very closely. How can this thing help me up my game? So almost every area right now has been kind of affected.
Talking about tilling the ground, we know that the Minister of ICT some time ago showed us how he uses his drone in his farm.
Exactly.
Very interesting. Maybe we can get some robots that will come and help us actually do the...
We even have some kind of innovation right now that probably through the satellite they can use probably to detect the areas where they can actually get good palm oils. That is actually one of the very good use of technology and AI as well. So it's actually touching every area, and I don't think there will be any area that will really be left untouched. And I think this is one of the fears humans actually have.
Yeah, well, I guess instead of making it a fear, we should make it a challenge to, increase skills, build our skills better and get new knowledge. But thank you so much, Chief Technical Officer at AfriInvest West Africa, Paul Edward.
Thank you very much. Thanks for having me.
Good to have you.
Yeah.
All right, now let's see what's happening in the global space. The first one may concern you. Yes, the United States Supreme Court is currently hearing arguments on President Donald Trump's executive order concerning birthright citizenship. Yeah, I think that case started yesterday. Hundreds of Nigerians who have sought citizenship through that means could be affected. The court is expected to deliver its ruling by the end of June, though a quicker decision remains a possibility. The executive order, which took effect upon Trump's resumption in office in January, seeks to deny citizenship to children born on the American soil to parents who are in the country unlawfully or on a temporary basis. So we'll see what happens. We have to count down to June. It's one of the changes that President Trump hopes to bring to the White House. And from there, we go to Japan, where the economy shrank for the first time in a year, contracting 0.2% in the March quarter as exports declined sharply. Preliminary government data has shown this today. The gross domestic product data was poorer compared to the 0.1% contraction expected by economists. On an annualized basis, Japan's GDP contracted 0.7% in Q1. Also, more than 0.2% fall expected, according to Reuters poll. Export fell quarter on quarter, shedding 0.8%. As uncertainties caused by U.S. President Donald Trump's trade policies affected the country's export-heavy economy. Domestic demand, however, was a bright spot, growing 0.6% in the same quarter and adding 0.7 percentage points to the GDP. On a year-on-year basis, however, Japan's GDP expanded 1.7%. That's the largest expansion since the first quarter of 2023 and a stronger showing compared to the 1.3% growth seen in the fourth quarter. In China, the country has temporarily paused export restrictions targeting 28 American companies on the heels of the trade truce that Beijing has reached with the Trump administration over the weekend in Switzerland. But China is continuing to block exports from that country of 7 rare earth metals to the U.S., whose defense, energy, and automotive industries rely on those metals. According to the Geneva Trade Statement, China has agreed to adopt all necessary administrative measures to suspend or remove the non-tariff countermeasures taken against the United States since April 2, 2025. One of those countermeasures is the rare earth export curbs. When asked about the rare earth control during a regular press conference, China's Ministry of Commerce spokesperson said it did not have any information to provide. On April 4, China announced a package of retaliatory measures against President Donald Trump's Liberation Day tariffs, including placing the export restriction on 7 rare earth metals. Some of those lutetium, terbium, scandium, and the others, 7 of them. Well, it's unclear why the rare earths control were not included when the Chinese Commerce Ministry announced easing of other non-tariff countermeasures from April. On Wednesday, China had removed 28 American companies from its export controls list for dual-use items, and it's going to last for 90 days. It also took 17 companies off its unreliable entity list, including 11 for 90 days. On the same day, the Commerce Ministry issued a statement on China's efforts to clamp down on smuggling of rare earths and the need for broader government control of the metals for national security. That's what they said. Still in China, the solar companies will continue their expansion into emerging overseas markets during that 90-day tariff truce between the U.S. and China that brings a more stable trade environment. This was revealed by company executives, and they said the easing of tariff policies between China and the U.S. is conducive to providing a relatively stable overseas trade environment for solar and energy storage sector. That's it on Business Morning. Thank you so much for being a part of it. What a ride we've had. We'll have another one coming your way at 1 p.m. So please join me for Business Incorporated. I'm Ini John Mekwa. I'll see you then.